Hello, hello, hello everyone, and welcome to our April live stream Q&A. Let's see if the bandwidth allows us to do our job today, or if we have problems. Please let me know. I'm looking forward to your feedback in the chat room. Let me know if you can hear me okay, if it's streaming okay, if everything's working okay. I would really appreciate knowing that. We are live with another live stream Q&A. If you didn't already notice, there is a Slido for asking questions, and the Slido code was on the screen on my Wiggly banner just before. So that's where you ask questions whenever you're ready. Now, are we ready? Are we excited to get started? Everybody's excited to get started. Why don't we just jump into questions and we'll see where this takes us. Our first question comes from Demosthenes. Do you think mining is becoming more or less decentralized? How open to Sybil attack are measurements of decentralization? Common FUD around Bitcoin involves the Chinese near monopoly on mining. Can this be definitively proven or refuted? It's a great question, Demosthenes, and it's a question that comes up a lot. In fact, it comes up more often during bull markets. Whenever we have a large rise in cryptocurrency, people start looking for reasons to discredit, dismiss, or ignore Bitcoin, primarily, and of course other cryptocurrencies that follow in that bubble rise. So first of all, let's define a term. What is FUD? FUD, a term first coined in response to Microsoft's marketing campaigns in the 80s and 90s, means for fear, uncertainty, and doubt. And we see that often. The idea that there must be some incredibly terrible environmental disaster being caused because of Bitcoin, or that mining is centralized in China, or that other problems will not allow Bitcoin to succeed. And of course, the irony is that this always happens precisely at the moment when Bitcoin is succeeding. So in any case, what do I think about this? I think mining is becoming less centralized over time, or more decentralized over time. And if you've paid attention to the various statistics that we can measure about mining, what we see, in fact, is a greater degree of decentralization from the beginning. So let's start with history. In the beginning, there was one miner. Well, clearly, that was very centralized. And then there were two, and that was more decentralized. Now, there are hundreds, thousands. We don't really know, but we do know that it's more than two. There's an important thing to understand here, which is the distinction between mining pools and mining. Very often people who make comments about mining centralization point to the centralization of mining pools, because mining pools have identifiable location. You can identify where a mining pool is located based on things like IP addresses. Of course, you cannot identify where the miners are located behind a mining pool, because a miner can point their hash rate to any mining pool they want, participate in any mining pool they want. So when a mining pool that is located in China has large hash rate, then that to many people indicates that hash rate is centralized. But mining pools are not miners, and it's important to understand the distinction. Some miners operate mining pools, and mining pools may also be used predominantly by people in a certain geography, but you can't really prove that correlation. Can you prove the negative correlation? No, because, of course, you can't prove a negative. We do know, however, that things have changed fairly dramatically since 2016. And one of the reasons things have changed in proof-of-work mining is because the manufacturing of ASICs, which advanced with leaps and bounds in the beginning, as people went from CPU to GPU to FPGA and finally ASIC mining, we saw increases of a factor of 100 or a factor of 1,000 year on year compounded. that is 2 to 3 orders of magnitude increases each year. That meant that if you had a mining capability 1 year, it was unprofitable due to the corresponding increases in difficulty, perhaps in as little as 3 months, and certainly in as much as 1 year. So you buy mining equipment and you deploy it, and within 3, 6, or 8 months, it's obsolete. It's no longer profitable to run it at the current electricity cost. So what does that mean? That means that you need to buy the equipment and immediately put it into mining, which often meant that people would manufacture this equipment and make it mine themselves and not sell it, or that it would be put into mining as close as possible to the fabrication plants. Now, that's no longer the case. As of 2016, ASIC manufacturing reached the front end of Moore's Law and is only right behind consumer-level chip manufacturing. And as a result, it can no longer increase by a factor of 3 or 4 every year. It can only increase by Moore's Law, which seems very, very fast. Twice as fast every 18 months, twice as much chip density for the same amount of money or the same amount of power consumption every 18 months. But if you compare that to where ASICs were before, that's in fact a massive slowdown in the development. And as a result of that, by hitting the front end of Moore's Law and slowing down, now ASICs are profitable for 2 years on average from the moment they're manufactured. What that means is that you can now manufacture and distribute, and that's a profitable activity separate from mining itself, and less risky because it's not as volatile as mining, which depends on the price of Bitcoin and requires some very, very big risks. That also means that mining equipment can be distributed to a broader geography and put to use, chasing the cheapest forms of energy wherever they may exist. And while China has subsidized energy that is very inexpensive, and it also has massive mismatches between the point of production of energy and the centers of energy demand, leading to wasted energy or unused, underutilized production, so does most of the middle of America, where we have gas flaring. So does a big chunk of Canada and other places that have hydroelectric power, etc., etc. So therefore, mining is becoming more decentralized as a result. Long answer to that question. We've got 300 people on the live stream so far. Lots of conversation. Lots of conversation in the chat, and fantastic. And we have a misinformation specialist who has come to talk to us and tell us all about the Lightning Network and why we're doing it wrong. Thank you, Unconventional Wisdom. I'm very glad that you were here to inform me about the Lightning Network. British dry sarcasm? You bet. All right, let's see what else we have. Next question up. In a world of 100% ultra cheap renewable energy, what happens to the security of the Bitcoin network? Thank you. Matt, in a world of abundant, cheap, and without negative externalities energy, society gets completely kicked on its head because you're talking about abundance economics instead of scarcity economics. First of all, I think it's extremely unlikely that we will ever become a society that has 100% ultra-cheap renewable energy everywhere, evenly distributed, easy to use, without negative environmental externalities anytime soon. And I'm talking decades, centuries perhaps, before that happens. What you're really talking about is essentially the change from a Kardashev type 1 to a Kardashev 1.5 civilization. We're not really doing that anytime soon. If you're interested in that, Kardashev type civilizations is how we classify civilizations as to the use of energy within their local solar system. It's a very interesting theory. So we'll do one more. So what happens to the security of the Bitcoin network? Well, simply enough, it would have to depend on something, either a different form of proof of work, or the proof of work would be primarily subsidized by fees. And I think the fact that you have ultra cheap renewable energy doesn't change the fact that you need to have mining in places where that energy is available to be consumed. I think that would just decentralize proof of work and make it more broadly available. At that point, the bottleneck becomes chip manufacture. So essentially, Bitcoin becomes a proof of ASIC system instead of a proof of energy work system, because if you have unlimited energy, then basically the space and availability of ASICs determines how much proof of work you can do. It's an interesting question, but not one that's really practical at the moment. Let's go to the next question. We'll do one more on mining and then move on. Anonymous asks, what is the ordering of transactions in a block? Does the miner decide the ordering? Yes. Individual miners decide the ordering unless they're working in a pool where the transactions are picked by the pool. It depends on the pool protocol that's being used. But in general, let's use this term and say, yes, the miner decides the ordering. And the ordering doesn't really matter. There are some constraints as to what you can and can't include in a block. So you can't, of course, include transactions that conflict with each other. You can't include transactions that spend the same inputs, double spent transactions. And so it matters which block transactions go in terms of sequencing, but not the sequence they have in the block. And of course, there is one special transaction, the first one, which is the Coinbase transaction. The only transaction that is mandatory in a block, you have to have a Coinbase transaction. But that's it. The rest of it can be empty. It can have as many transactions as you can fit, and they can be in any order you want, and it doesn't really matter what the order of transactions in the block is. Now, the way miners use this is they use it as an additional source of entropy when they run out of nonce space in order to change the block header hash, meaning that as they cycle through hashing the block header and changing the nonce, at some point they run out of changes they can make to the nonce and the extra nonce, etc. With modern ASIC mining, which is incredibly fast, especially if you have lots of them, you would need to try to change other things in the block. And the easiest thing to change in the block is the order of transactions. So all you have to do is flip two transactions around and recalculate the Merkle tree, changing the Merkle root, which is the hash of the root of the Merkle tree, and that will change the block header, which will change the block header hash, and then you can start your nonce again from zero and just try another 32-bit or 4 billion nonces in that particular hashing effort. So miners use it for that. All right, so that's a bunch of mining questions. Are you settled in? Are you feeling comfortable? Are you ready? Are you ready? Are you ready? I've got an announcement to make. I wanted to talk to you a bit about what happens over the next couple of months, over the next few months. This may cause some flapping and gnashing and consternation among some people in my audience. So moderators, please, this is the point to start doing your flexing exercises. Make sure you limber up the block button. Very, very good. My moderators are all ready. 2 weeks ago, I received my first dose of the Moderna vaccine to protect me against COVID. I can report the results going very, very well. This arm was sore for about 24 hours, after which everything improved. My my Windows operating system was updated for the first time since Windows 95. My 5G and Wi-Fi reception signal strength increased tremendously. I started hearing Bill Gates' thoughts directly in my head, and the government was able to track my location with absolute precision. Also, I started developing immunity against SARS-CoV-2, which I think is kind of a nice thing. And I went out on Twitter and I announced that to my audience, not in any particularly political way. I just said, you know, I got my first dose, and I'm just so thankful to all of the researchers, the scientists who put the work in over the last 15 years to develop things like mRNA vaccines and pandemic preparedness and all of the tools that we have at our disposal that make it possible for us to get a vaccination like this. I'm pro-vax, right? I've received my childhood vaccinations 3 times because the immigration authorities in different countries didn't believe that I had them, so I got them again. And, you know, other than this result, which you see here, I would say mostly unscathed from that experience. And in fact, I've also gotten a whole bunch of travel vaccines because I go to tropical places and other places where there are a number of different diseases. Apparently, saying that I got my COVID vaccine caused a huge response, and lots of people explained to me how I was a statist, Marxist, brainwashed leftist from the lamestream media who was helping the deep state because I made a voluntary personal choice to vaccinate myself for my own protection, but also for the protection of the people around me that I actually care about by getting a vaccine developed by thousands of scientists and produced by private companies and delivered in a private healthcare system, and that, of course, means I'm a deep state troll. So that caused a huge backlash, and I was informed that I had failed to do my research by people who sent me links to a YouTube video and you know, the blog of a very well-trusted chiropractor and others who had great information to help me understand how much stupid non-research I was doing. Let me tell you something. I'm a scientist. Like, I'm a bona fide scientist. I've got a freaking master's degree in science, and I led a research team for 3 years as a research fellow at University College London, the University of London, Ivy League University in London, where I published research papers in peer-reviewed journals, and I did research review, and I know how to read journals, how to analyze data, how to do statistical analysis, how to do fucking science. So when you come at me and tell me to do my research because you watch something on YouTube, I'm sorry, I don't have much respect for that position. I have done my research. So when you say, I don't understand how you can be so stupid in this one area when you're so smart and so knowledgeable in so many other areas, that's the moment when you pause and consider what you just said. Because there are 2 possible assumptions you can make there. 1, I'm stupid and brainwashed. 2, some of the critical thinking skills, analysis, and research that I meticulously put into every aspect of my life because I'm a geek, because I'm methodical, because I do critical thinking, because I'm a scientist, because I research things, because I am a knowledge vacuum that loves to read and understand things in detail that I apply meticulously to all the other areas of my life. I somehow fail to apply to something that has affected everybody's life lately, or you're an idiot. You're an idiot. In 2 weeks, I'm going to get my 2nd dose. And about 14 days later, I'm going to have sufficient degree of protection from infection, including protection from infection of the various variants, that I feel more comfortable to be able to extend help to some of my family members who are immunocompromised, who are elderly, who have also been vaccinated, and I will then be able to give them more practical support. And that means I'm not going to be in a position necessarily to have a studio set up permanently. It's been a year and 2 months since the beginning of the pandemic, at least for me, and since I went into isolation and set up a full-time permanent studio. During this time, we did more than 45 live streams, almost one every weekend, from a high-quality production studio with lights and cameras and microphones and all of this stuff. And it's been difficult to maintain and travel with, but I've done so. I won't be able to do so for the next period of my life, because I won't have access necessarily to a studio, to bandwidth, to things like that. So we're going to make some changes. Not huge changes, minor changes. So first of all, we may switch to doing audio-only events. The next Q&A is most likely going to be an audio, because I'm going to be not at this current location. And then after that, my team is very excited in finding ways to deliver some great content, and it kind of opens the door for us to do things a bit differently, to change things up. It's going to be different than what we've been doing for the last year, but I promise you it's going to be good. They're working on some remastering videos, and we have some upcoming workshops, which I'll talk about in a bit. So that's my announcement. There won't be a live stream next weekend, and in fact, we haven't scheduled any for a while. We're going to be scheduling some upcoming Q&As, and the format will probably be a bit different. But that's because, finally, and Bitcoin collapsed because I said that. This is what happens when you take a pro-vax position in the Bitcoin industry. Bitcoin collapsed. I apologize for the collapse of Bitcoin. Finally, my producer's trying not to laugh. Finally, things are beginning to return to normal, and I can be there for my family. So I hope you're happy about that, because I certainly am. And once again, I am so grateful to the thousands and thousands and thousands of healthcare professionals, doctors, nurses, researchers, scientists, engineers, production assistants, logistics supervisors, etc., who have made it possible for the world to have vaccines. Now, the US is very fortunate because it's basically bought its way into the lead in terms of vaccines, and I hope they're going to be more broadly distributed. I hope that vaccines would be made available at no cost and patent-free as generics everywhere in the world, because this is a global effort. We have to get everyone on this planet who wants a vaccine able to get a vaccine for free, and I fully support that. You do you. I'll do me, but don't tell me to do my research, because as you can see, I'm not afraid to let a clock drop. All right, let's go back to the questions. What is speedy trial BIP8, and what does it mean for Taproot activation? And I heard that Taproot activation has already launched. Speaking of clocks. So speedy trial is a proposal that looks like is going to be merged into Bitcoin Core. I don't think it has been merged yet. Last I checked, which was day before yesterday, it hadn't been merged, but that may have changed in the last 48 hours. So let's talk about Taproot activation. What is Taproot? And then go from there. Taproot, or as I like to pronounce it, Taproot, because I'm European and I'm going to flaunt my French accent. Taproot is a package of changes defined in BIPs 340, 341, and 342, if I remember correctly, that include a whole bunch of changes to the protocols of Bitcoin in order to enable some new features. At the core of this is a new signing or signature algorithm called Schnorr signatures. And Schnorr signatures, it comes alongside the existing signing algorithm, which is called elliptic curve digital signature algorithm, or ECDSA. So currently we have ECDSA and only ECDSA. Once Taproot is activated, we will have Schnorr signatures and ECDSA, and people will be able to mix and match. They'll be able to use Schnorr signatures for some inputs and outputs and ECDSA for other inputs and outputs, and use them on the network interchangeably. Now, this is important for a number of reasons, including it demonstrates that Bitcoin can have a digital signature upgrade, which becomes important for quantum resistance way in the future, maybe a couple decades from now when we need to do it again for another digital signature algorithm, but regardless. Schnorr signatures are compact, they're efficient, and they can be aggregated and added to each other to do various nifty tricks. As part of this upgrade, there is another big change, which is the implementation of TapScript and Mast. TapScript is the second big feature. It includes the ability to take the script that is locking a specific output, present it as a hash, which does not represent a script hash, but instead represents a script tree, a Merkle tree of scripts, the root of a Merkle tree of scripts, which you can then spend by revealing only one branch of the tree. This is a huge privacy upgrade. It's also a huge efficiency upgrade. Let's say I have a complex script right now that says, if Bob and Alice sign together with this multisig, or after 90 days Charlie signs with this key, or after 120 days Daniel adds this key plus Chan and Wei's key, then you can spend this. That's a complex script that includes many clauses. When I go to spend it, I would say I'm going to use the first one, which is Bob and Alice, and here are the two signatures required, but I have to present the entire script. Now, not only is this a privacy problem, you see the whole script, but also it's an efficiency problem because that takes up a lot of space. Now, I will only reveal that part of the script that I'm going to exercise to unlock and spend that amount, and a Merkle path that proves that it was part of the original tree. And finally, Taproot, that allows the combination of signature signature aggregation, where the sum of Schnorr signatures is a signature whose public key is the sum of public keys, making it look like a single payment. So pay to Taproot becomes effectively indistinguishable whether you have a complex script, a multisig, multiple pairs, or a single person making a single payment to a single person. This is a huge privacy boost because it extends the anonymity set of all payments to all look like simple payments. You're closing a Lightning channel with pay to Taproot, it's going to look like you're making a single payer payment in your collaborative close. You don't need to show that it's a Lightning channel at all. Massive privacy increase. You already can't see it's a Lightning channel when we open it because it's just going to a pay to script address, but now it's going to go to a pay to Taproot address, and when it's closed, it's going to be closed in such a way that you can't tell if that was just me buying a t-shirt on a shop or anything else. All right, that was an explanation of what is Taproot, long explanation, but you probably like that stuff, so you need to hear it. Now let's go on to what is BIP8. So Taproot's been in the works for 3 years, and with Schnorr signatures maybe even a bit longer. It's been in testing for a very long time, but the big question was, how do we activate it? How do we take something that's implemented and tested in code, that's been deployed on testnet, and then and been tested in various test networks, and make it active on the Bitcoin mainnet? Well, for that, there is a Bitcoin Improvement Proposal, BIP, and there are a number of BIPs that describe activation mechanisms, the most important of which are BIP 9 and BIP 8. In order to figure out how to do this, there was an informal poll made, and most of the miners wanted something called BIP 8. And BIP 8 is a mechanism where you use a sequence of steps to activate a feature on the network by allowing miners to vote. And if enough miners vote within a single difficulty period, which is 2 weeks, then the feature becomes activated. Now, this all started as a conversation back in October, and then it got bogged down with a lot of dissenting opinions, and a lot of controversy about exactly how it was going to be activated. Primarily, the conversation was about whether miners should be given the opportunity to veto this feature. Even though nobody really thought that miners were going to veto this feature, they did try to veto SegWit, and nobody thought they were going to do that. So who knows? Some of the developers wanted to preempt that and say, no, it's going to get activated whether you vote for it or not. You can only vote to activate it faster, but you can't not vote and not activate it. We're going to have a flag day activation with lock on timeout as true. And others said, let's just give miners an opportunity to prove good faith. There's no reason to assume they're not going to activate it. This is not controversial. We want lock on timeout false, and if we fail, we'll try it again. But that would take 2 years. The compromise is a proposal called speedy trial, and it's a fail fast, fail soon, fail early type approach. And what it says is, let's give miners an opportunity to activate this in good faith, but let's do it really fast. They either activate in good faith, or we know by this August that they're not going to activate it. Speedy trial has an activation start of April 24th. That's yesterday. And anytime after yesterday, if this gets added to the latest version of Bitcoin Core, people can start signaling, and we will start counting their votes in the Coinbase to see if miners want to activate this feature. As miners start signaling activation, if 90% of miners indicate approval, then the feature is locked in and it will be activated. They have until August 11th to get their act together and get 90% of blocks signaling within a 2-week period. Every 2 weeks we start counting again. And if in any 2-week period 90% of the block signal activation, then Taproot will become activated. Not immediately. It will become activated in November on a specific block number. So voting ends August 11th. By August 11th, we will know either yes, it worked, or no, it failed, and then we can try something else. If it's failed, nothing's going to happen after August 11th. We can then do a flag day activation, a mandatory BIP8, all kinds of other options. At that point, the miners have failed in good faith to activate a non-controversial change to the system. But in all likelihood, what's going to happen is miners are going to signal. We will get 90% before August 11th. The feature will be activated, perhaps very quickly, perhaps in a matter of a month or so. And then, come November, it turns on, and we can start using Taproot, which is going to unleash all kinds of capabilities. So that's my very long answer on Taproot, BIP8, and speedy trial activation. I think it's a fascinating topic. I'm very glad you asked me about it. And it's made me very, very hopeful. So another question from Anonymous, which is a follow-up. In the event of a fork or BIP or similar, how do I vote with my node? The way you vote with your node is by selecting a version of the Bitcoin client software, which is probably Bitcoin Core, but it might be one of the others, that takes certain measures. Some node software can signal if we're doing what's called a user-activated soft fork, where we're counting the votes of nodes. That's generally not a preferred mechanism because it's very, very easily Sybil attacked. So people can go and buy 1,000 nodes on Amazon Web Services and signal all they want, no skin in the game. You can also vote by embargo, effectively by rejecting blocks. And this is the reason we do a user-activated soft fork, is the threat that our nodes will embargo blocks that do not follow a certain set of rules. Or you can choose to ignore a fork by not changing your rules. So that's how your node participates in consensus, by choosing which version of the software you run and how you configure it if there are configurable parameters. In this particular case with BIP8 and speedy trial, you don't need to do anything. All right, let's take a little break. Why don't you please engage in the most important activity for my audience, which is the emoji storm. Now, you may think this is trivial or silly, but I think it is an important civic duty that every YouTube community member has to participate in, because you have the unique power of using the custom emojis that my team has so meticulously put together in Microsoft Paint. Painstakingly, pixel by pixel, they have built these beautiful emojis for you, so you can flaunt your YouTube membership. This is a status symbol, people. This says to the world, I spent $1.99 a month to get these beautiful, pixelated, wonderful, colorful emojis, and I'm not gonna hold back. Fantastic. I love that. Thank you so much for all of your emoji storms. You know, this is probably a good time also to thank all of the people who make it possible for us to do this work. And as you noticed, not only did we deliver more than 45 live streams this year, but also a ton of other bits of content, all produced and video edited with chat, with moderators on the chat, with all kinds of special content. We've translated a whole bunch of books. We've launched a new website, a new store. All of this is possible because we are supported not by ads, not by endorsements for products or chains, not by sponsors or corporate donations, but because you have stood up and said, this educational mission is important for the world. And some of you say, hey, you helped me get to where we are with Bitcoin today. I want to pass it forward, and that's great. I really appreciate that. Many people have been able to understand this technology because of my work, but many of you do it not because of what you benefited from, but because you truly, truly believe that this is a mission worth doing. And I agree with you, and I would like to thank you for all of that. So let's go through and personally thank all of the people who make it possible. So I'd like to start by saying that quite clearly, my patrons are out of this world. I mean, look at that. We have a kitty. It doesn't have laser lights, but it has a big projector on its head, and it's in space. What more could you ask for? I'd like to thank the following patrons who volunteered to opt in by having their name acknowledged here, and some of them picked some silly names. We're going to have fun with this. Of course, there's a lot more people who want to remain anonymous, and that's perfectly fine. Zakia Days, Yes to Crypto, Woohoo BTC, Walter Day, Tukunare Imba, Thesia, The Goddess Eris, Spin Backwards, Sababan, Richard Taylor, Rafael Cislak, Pendulum Education, Parbull, Outbacktrader, Operator Burst Up, Mitch, Masterplank, Lucia, aka Dancing Crypto, Livestreamy Livestream Face, Catherine, Jordan Loves Andreas, thank you, Jordan, John Cool America, John Lord, Joey, JKP, Jeff Shen, I Want Your Baby Andreas. Okay, just to clarify, there are many perks on Patreon. Insemination is not one of them. I am sorry to say. We did investigate it. It violates Patreon terms and conditions. But thank you. I Want Your Baby Andreas. Hong Chao, H.E. Pennypacker, Wealthy Industrialists, Guillaume Desiel, Giovanni and Frank. One more page to go, people. Thank you, thank you. Eddie Travia, DJ Magic Mike Coffee, Dennis K, Demosthenes, Deborah, David Orban, David Fryer, Crypto Karen, Corey, Christos, Brian Tsutomu, Brooklyn Frank, Bitcoin Newbie, Bitcoin Dad, Binky, Attila Dazo, or Dacho, Akil Uyghur, Outlier Canada, and Make Void Francesco Canessa. And of course, 850 anonymous, but no less important, members of the community who do a lot more than just contribute their money, of course. They contribute their ideas, they give us focus groups, they help us brainstorm, they review things, there are beta testers, and they help with all of the activities, including, of course, all of the YouTube community members who help us moderating the dumpster fire of YouTube comments full of impersonators trying to sell you investment schemes. Various people who help us with moderation in the chat. Yes, to crypto, thank you again this week. And others, so many others, thousands and thousands of people who over the years have worked really hard to make it possible for us to do this. Let's talk about privacy next. I'll quickly switch windows here. outbacktrader asks, Bitcoin is very transparent and thus is not really 100% fungible anymore due to tagging by banksters. Can you think of a reason why a smart person like Satoshi did not implement anonymous transactions right from the beginning? That's a great question, outbacktrader. You know, really the primary reason, I think there's two primary reasons. One is you have to realize how just out there Bitcoin was, how many just critical innovations Bitcoin introduced in a single package back in 2009. It combined peer-to-peer networking, proof of work, the blockchain concept, Merkle trees, public key cryptography, addresses, various encoding formats, like a lot of different experimental technologies together in a very novel way. Now, one of the things that is certainly true about technology in general is the more new things you try to introduce at the same time, the more the risk of failure multiplies. And there's another really important thing to realize, and that is that the technology that we have today and the research that has been done on things like zero-knowledge proofs, various forms of aggregation of signature, ring signatures, things like that, anonymity sets, homomorphic encryption, etc., including the practical optimizations that have been done, things like bulletproofs and ZK snarks and starks and things like that, that massively reduced the efficiency penalty that you have to pay for implementing strong privacy solutions. None of that existed in 2009. In 2009, if you wanted to do homomorphic encryption or zero-knowledge proofs, or if you wanted to do encrypted transactions, you were looking at 20 kilobyte transactions. So you had to pay a penalty in either space or computation for both making the proof and verifying it that was unfeasible. So that's why Satoshi didn't do it. Reason number one, you don't put too many untested technologies into your basket if you want to succeed, because any one of them has risk, and when you put too many, you multiply these risks together. You don't just add them. And secondarily, the technology just didn't exist. It does now. So will Bitcoin adopt some of this technology? I don't know. Taproot is a big privacy upgrade and is just one element of these technologies that's being introduced. And I hope we will see more. I think privacy is the most important thing that Bitcoin needs to work on or develop or enhance. And that's the reason that I support further developments in privacy in Bitcoin. Keep in mind, there are privacy coins. And Bitcoin is sound money. I would like to see sound private money. And it's not easy to get that combination right. Some of the privacy technologies expose us to inflation bugs. So we don't want to sacrifice the sound money for privacy, but we also don't want to sacrifice privacy completely for sound money. I think there's a golden mean in that particular case. Next question. Which of the BTC privacy services, for example, Wassabi Coinjoin, Samurai, Whirlpool, JoinMarket, and there's many more, are easiest to use for a beginner? What are some of the unexpected behaviors and pitfalls a beginner should be aware of? I would say probably the first two that you mentioned are the easiest to use for a beginner. Samurai Whirlpool, that you can use on a mobile device running the Samurai wallet. But you can also use on as a service that you run next to your node. Wassabi Coinjoin, which you can use as a desktop application, multi-platform desktop application, very easy to use. Both of those are easy to use, and they both have features to prevent you from making mistakes. What they'll do, among other things, is they're going to force you to segregate your tainted change and not mix it back in with the rest of your privacy-protected coins, because that breaks the privacy, for example. A newbie should be aware that if you go and mix your coins and you then take those mixed coins that have enhanced privacy, where the taint has been broken, where you now have a greater degree of anonymity, and you take those and you associate them, of course, with unmixed coins in a transaction, or you move them to a wallet that doesn't have privacy considerations, or you use them with an exchange, you're going to run into trouble. You may end up getting your exchange account shut down. That's a common thing. They may decline to take a deposit or bounce it back to you. And you may also end up retainting the coins that you very carefully mixed. I would say JoinMarket is not as easy to use. Last I remember, it was a command line interface. Most people are not that comfortable with a command line to use it. It's very powerful, of course, very, very powerful. And I've used it and experimented with it. I think it's an interesting solution, but not as easy to use for newbies. All right. Do you think this might be a good time to do a down the rabbit hole? I think it might be a good time to do a down the rabbit hole. Now, for those of you who don't know, a down the rabbit hole segment is a segment where I ask you the question that you didn't ask me, or I ask myself the question that you didn't ask me, or that you didn't ask me in the way I wanted you to ask me, so that thereby I can pretend to be answering a question. But in fact, it's me asking me and then answering me, which is really also known as a straw man argument. But let's not get into the details of how ridiculous this whole topic is and go straight to down the rabbit hole. All right, the topic of this segment of Down the Rabbit Hole is capital gains taxes, and more in general, marginal taxes. Now, okay, hang on. Some of you started snoring already. No, please wake up. This is important. Now, if you were not in crypto, you probably have no idea what the hell capital gains taxes are. I certainly didn't know much about capital gains taxes before I got involved in cryptocurrency, and that's because in most everyday life, even when you're dealing with foreign currencies due to something called the de minimis exception and various other little facilitations for the middle class, you don't really get exposed to capital gains taxes. In order to get exposed to capital gains taxes, you have to be an investor. In crypto, of course, there are no de minimis exceptions, meaning that there is no amount below which capital gains don't need to be accounted for. You have to account for it in general in the US. Other countries may differ. Almost all countries have some form of capital gains taxation. And so therefore, it's important to understand these things. If you live under a rock, you may have not noticed that 2 or 3 days ago, the new administration's plan for capital gains taxes was announced in the United States, and that plan includes a 39.6% marginal tax for long-term capital gains for people making more than $1 million a year. And well, the markets freaked out. The traditional markets freaked out, and the crypto markets freaked out. And then they mostly recovered because, as is always the case in markets, there's a lot more reaction to the news than to the reality of the situation. And a lot of people react not because they see fundamentals have changed, but because they think other people will react, and that creates a cascade effect. So we saw that happen. At least that's one of the possibilities of why the markets reacted, but then again, you can never tell. So let's discuss this topic because I think it's very important to understand these things and understand where the risks lie. So, are you about to pay 40% tax on all of your beautiful crypto gains? Probably not. Probably not. And if you do, congratulations. That means you're doing really, really, really well. Really well. But for the most part, no, you're not. Here's a couple of important things to understand about how capital gains taxes work in the US. I'm going to give you this information based on my own personal experience and what I've learned. I'm not an accountant, I'm not a lawyer, and I'm speaking primarily about the US because that's the tax regime I understand better, because that's the tax regime I operate in. Please consult your financial advisor, your accountant, your CPA, your attorney, in order to understand these things better. But the bottom line is this. Capital gains or capital losses are taxes that you pay on the difference in value in an investment that occurs when you do something with that investment that triggers a taxable event. So let's say you buy crypto and then you sell crypto. That sale of crypto is a taxable event. It triggers the assessment of capital gains, meaning that at that point, you have to estimate how much gain or loss you achieved from the moment you bought that crypto until the moment you sold it. Now, there are two categories of capital gains and capital losses, short-term and long-term. In the US, short-term is anything held less than a year, long-term is anything held over a year. Short-term capital gains really are taxed as income in the US. So the standard rules for income apply, meaning that you have a series of rates that apply as a marginal tax rate. So you'll have 0, 10, 15, 25, 28, 30, 37, whatever. I don't remember the exact marginal tax rates. I can't remember them off the top of my head. And these basically increase as you go up in your earnings, but they only apply to the amount over that threshold. You're only taxed for your marginal value over the threshold. So short-term capital gains work like that, income taxes work like that, and now, and long-term capital gains also are marginal taxes based on an income threshold, but they're being aligned more closely with income, earned income taxes, whereas until now, historically in the United States, capital gains taxes have always been taxed much lower than income. So investment income is taxed much lower than income from labor. And this is now likely to change. This hasn't passed in law. It's not applying to 2021. These things will get passed into law. If you want, watch the documentary, How a Bill Becomes a Law. And once they become a law, they're not going to apply retroactively. So don't need to worry about it for this year. But in any case, let's understand how marginal rates work. A lot of poor and middle class people, myself included when I was younger, do not understand marginal rates. If the marginal rate for people making over, I don't know, $150,000 a year is 30%, that does not mean that you're going to pay $50,000 in taxes. That means you're going to pay 30% of every dollar you make above $150,000. So marginal rates only apply above the threshold. Usually you have a series of thresholds. So for example, with capital gains today, let's say you're a married couple with a couple of children and you make $70,000 a year purely on investment income from capital gains. You bought Bitcoin, you did well, and you sell $70,000 worth of Bitcoin this year. Long term, you held it for more than a year. How much are you going to pay on that? Most likely, zero. The marginal rate for up to $77,000 this year, I believe, is zero for a married couple. For singles, I think it's something like 60-something or 50-something, I'm not sure. Then, for the next between 77 and 150,000 or something like that, you pay 10% or 15%, and then you pay 20% above 400,000. That means that if you sell $401,000 worth of crypto, you're going to pay 0 for the first 77%, 10 for the next 100, 15 for the next 150. You're going to pay 20% according to the current capital gains for the $1 over 400,000. You're not going to pay 20% of 400,000. So marginal rates, important to understand it. So what we're talking about here is 39.6% on realized gains, meaning that you actually earned these gains because you actually sold, you created a taxable event, or you bought another crypto, or you bought a house, or you bought a boat, or you plowed all of your money into Beanie Babies. And that's a taxable event. If you buy anything with your crypto, if you trade it for another crypto, if you sell it for dollars or euro or whatever, if you gain value from it, you have created a taxable event, and you're going to pay marginal taxes on that up to 39.6 for anything over $1 million of that income. So you're not just going to pay 40% of all of your crypto gains. And you're certainly not going to pay anything if you don't sell. So if you're just holding. So a lot of people who freaked out over the idea that they're going to pay 40% on their crypto gains because they put in $100 and they now have, $2,000, and they're like, man, I was going to buy a car with this money, but now the government's going to take 40% of my $2,000. That's not going to happen. You have nothing to worry about. That's not the case. That's not how marginal taxes work. But there is a danger, and it's a very big danger. And the danger that we saw happen again and again and again in 2017 is getting a whole bunch of taxable events from trading back and forth and back and forth and back and forth between different cryptocurrencies, not realizing that you're creating taxable events, not realizing that you're creating gains, and then pissing away those gains over a period of 1 to 2 years, more than a year, all short-term gains on which you owe capital gains taxes. Now, if you do it all within a year, your losses will offset your gains. It's not going to be a big problem. But here's where it gets really shitty. Let's say you sell Bitcoin that you bought at 3,000. You sell it at 60,000 on December 31st to buy Doge. And you make a gain of $100,000 worth because you had, 2.5 Bitcoin or whatever. And you bought Doge with it. And on January 5th, that Doge goes to 0 and you make a massive loss. So you've effectively lost $120,000. Well, the IRS is now going to come to you and ask you to pay for your capital gains of the previous year, and you owe that. You can't say, well, in January I had a loss. Can we count the loss in 2021 against the gain in 2020? No, you owe that money. And a lot of people did that in 2017 and got really badly burned. They made a bunch of gains through trading back and forth and creating all kinds of taxable events in one year. Then, in the following year, they made a bunch of losses. They still owe the gains. Sometimes they actually have to force sell their crypto at a massive loss because they have to pay the taxes. And then they can take those losses, and you're sure they can roll those forward for future gains that they're never going to get because they're now broke and or bankrupt and owe money to the IRS. Or they can take a 3,000 loss a year as the maximum loss they can take as a net loss. It's a really dangerous game to play. If you are day trading crypto, especially if you're trading in the alt market, because it's alt season, isn't it fun? And you don't understand how capital gains work, what taxable events are, and how marginal rates work, you could get yourself in a shit ton of trouble. Not because the scary Marxist administration of Joe Biden, who is only a caretaker administration until Donald Trump comes back, will tax you 40% on every dollar you make, but because you didn't understand how the rules work and the rules kicked you in the ass. Here's one of the big differences between people who have and keep their money at any level of the economic scale, whether you're working middle class, like the family I grew up in, whether you've made some money on crypto and you want to keep it, or whether you're super rich because you did really well with these investments or shilled some altcoin for influencer money and managed to avoid prison for that, then you need to learn how the rules work so that the rules can work for you. Knowledge is power. Power and knowledge allow you to keep whatever money you've earned, even if it's just a small amount. So, people get burned by the rules they don't know, and they can use to their advantage the rules they do know. Learn the rules. Use them to your advantage. How are we doing? Are we having fun? Oh yeah, follow up. Some states, US states, have their own capital gains. People in California and New York are going to be paying even more than that. There's also a 3.8% investment tax to fund the Affordable Care Act, which is assessed on investment income. There's also other taxes, surcharges, and things like that that are changing, but that's not what you need. And that concludes our rabbit hole. Thank you for watching this segment of Down the Rabbit Hole. We're not done. I'm going to take 2 or 3 more questions after this very short series of ads that I'm going to force you to watch by promising you unreasonable promises. Like, for example, the questions that are going to follow are really, really interesting questions. They're fascinating questions. They're the best questions. I have no idea how my producer is going to make good on that promise. I haven't reviewed what questions are coming up. I am pulling this information straight out of my ass. Can you give me a hi? Let's see what we have coming up. First of all, thank you so much for subscribing to my YouTube channel. If you haven't already, there's a big red button right below this video that says subscribe. We just managed to hit 250,000 subscribers. 250,000 subscribers. And because of that, I am going to get a special plaque from YouTube made of nougat. No, actually I'm not. That would be lovely. They were supposed to send me a plexiglass one at 100,000 subscribers. I never got it. Damn you, YouTube. Where's my plexiglass play button? And can I please have a nougat one for 250,000 subscribers? Also, for those of you who don't know, we've got some exciting things going on with development. We've done a lot of stuff during the pandemic. We developed a whole bunch of new things, including a new website. Have you seen it? It's so nice. Look how much I'm smiling. I'm smiling because I was just reviewing the website and I liked it so much. Look at that big smile. That's my big smile because the website looks awesome. The shop looks even better than before. We've got some great, fantastic, amazing, unique products like baby onesies and new t-shirts like you don't need a blockchain for that. And finally, coming soon, new workshops that we've been working on throughout last year. Hands-on demonstration of hardware wallets, backup recovery, and backup of seeds, initialization, all of that stuff. Really, really good stuff. I'm very excited about that. A whole workshop on self-custody and wallet security and how to use your hardware wallets. And finally, inheritance planning. All of those workshops are going to roll out over the next couple of months, well, the next few months, as my team put the finishing touches on these. And of course, all of you who are subscribed to my Patreon platform get early access to all of these. Now, this sounds like a tremendous perk, but in fact, it's a beta test. We get to figure out if it is awesome or if it needs tweaking. But anyway, let's consider it a perk. You get it. YouTube members will also get early access to these and other things on the website. And so if you want to support my educational mission financially, with your attention, with your efforts, with your activities, by promoting it, I would very much appreciate that. And you're going to get some neat perks. Most people don't do it about the perks, though. Why do they do it? Let's hear it from the patrons themselves. And as soon as we come back from this short video, I'm going to answer 3 or 4 more questions in the April livestream Q&A. Take it away.
I am a patron of Andreas because I came across his videos online, and that's how I learned about Bitcoin. So that's how I got introduced to Bitcoin.
I'm out tonight at a social event organised by Andreas as part of his Patreon support. We just had a few drinks in a pub, which is a Punch Tavern, downtown London. So it's been a really fun evening to meet a lot of like-minded people.
We should support the work Andreas is doing. He's doing so much in getting new people into Bitcoin and into Bitcoin education.
He's a great teacher. He can explain very complex topics in an easy to understand way. He's very honest, very precise, technically prepared, and intellectually honest. I think is his best characteristic.
Brings such clarity to really complex subjects, which is Bitcoin, and the industry around it.
He has been a very, very good inspiration for me. And every Bitcoin I'm giving to him, it will be very well used in helping others understand Bitcoin, and I think it will improve the world at some point.
Being a patron, I get to meet Andreas, and that's why I love being a patron. I'm going to continue being a patron.
I think it's just a good thing. If you're interested in learning new things and also want to support the Bitcoin community, then you got to be a patron.
Being a Patreon makes you feel special. You can attend to his live Q&A sessions. You can meet him at happy hours. It's really great, totally worth it. I'm very, very enthusiastic of being a Patreon.
I'd like him to be able to produce his great and valuable content in the future, free from advertising, and just with the help of his patrons, and that's why I'm supporting him on Patreon.
All right, and we're back. Let's look at our next question, which comes from our friend Demosthenes. Demosthenes asks, how could or should Bitcoin be included in traditional primary and secondary education K through 12? What disciplines, for example, mathematics or economics, are most relevant to mass education? Demosthenes, I would argue that Bitcoin should not be included in primary and secondary education. I don't think it's relevant to discuss particular implementations or instances of digital money or cryptocurrency in primary and secondary education. However, more importantly, I think what should be introduced is 2 things. One, fundamental economics and personal finance education. Education that I never received in my school, and I certainly know that they don't teach in American schools. My primary and secondary education was in Greece. And it was very high quality education, especially in math and sciences. But we didn't actually do anything about economics or finance unless some of my fellow students did a specialization in their last year of high school where they did that, kind of like AP classes, but the rest of us did not. most kids around the world leave their primary and secondary education with no understanding of personal finance, with no understanding of fundamental concepts like saving and debt and compound interest. And these are incredibly important things to learn. Compound interest will kill you if it's attached to your debt, and it will make you wealthy over time if it's attached to your savings. It's an enormously powerful concept. And of course, further understanding of fundamental economics, price equilibrium, supply and demand, microeconomics, how do markets work, how do investments work, what are bonds and stocks, and macroeconomics, what is inflation, what is money, what are interest rates, what are reserve currencies, things like that, preferably with a bit more than the standard Keynesian playbook, and some mix of opinions and some exposure to Austrian economics, perspectives about scarcity and utility of goods and understanding value from that perspective. So I think those would be great things to learn in primary and secondary education. Most kids cannot answer the question, what is money? Most kids do not understand, most young people, most adults do not understand what money is, how inflation works, how it affects them personally, how markets work, what a free market actually is, what is a luxury good, what is an elastic good, what is inelastic good, what is a substitute good, how does competition work in markets. All of these fundamental concepts in economics I didn't learn until I was in university, where I took economics courses for my own benefit and read economic textbooks for my own benefit. Until then, I didn't understand any of the concepts. Of course, my big crash course was in Bitcoin, where I got exposed to Austrian economics and understood money on a level I never understood it before, simply by juxtaposition of novel concepts that didn't fit the existing framework that I had in my head. So don't teach them about Bitcoin. Teach them about money and personal finance, and they will figure the rest out themselves. All right, let's see. I set a very, very high expectation, my producer, to queue up questions, and now they have delivered. Bradley Hanson asks, how do you recommend interacting with friends, acquaintances who are newer to crypto and who are chasing gains in altcoins while being hesitant to Bitcoin? Thoughts on long-term success of Bitcoin versus altcoins? Bradley, this is very, very difficult. I'll tell you, this is something I have struggled with myself. I think if you follow an absolutist perspective where you say Bitcoin is the only thing you should ever invest in, everything else is trash, you shouldn't look at anything else, you will lose credibility and you will not get your point across. I think it's more important to say, to ask this from the perspective of epistemology, which is basically investigate how and why your friends and acquaintances are making these decisions. So first of all, ask, are you trying to do some kind of portfolio diversification? Is this why you want to invest in these other things? Or are you looking for extra yield? What is your risk tolerance? Why are you investing in these altcoins? So, for example, a very common answer I get to questions like that is, I want to diversify my portfolio across crypto. Well, okay, is that possible? If you look at the correlation between Bitcoin and altcoins, they march in lockstep for the majority of time, and all you do is you dilute your performance by spreading across things that march in lockstep. That's not diversification. Arguably, you get more diversification by investing in Bitcoin and US Treasuries than you do by investing in Bitcoin and, I don't know, some other cryptocurrency. This isn't about all altcoins or sharecoins. First of all, I don't believe that. Absolutes like that do not serve in a debate or discussion that is based on reason and technical analysis. Another way to approach this is to ask, why this particular cryptocurrency? What is it about this blockchain that has you excited? And I've developed a framework like that. And the framework isn't so that you can explore all these other cryptocurrencies. It started primarily as my expression of why Bitcoin. And that acronym is RIPCORD, and it stands for a series of questions you ask. So I think Bitcoin is special because it is, not because it is Bitcoin, but because it is revolutionary, immutable, public, collaborative, open, resistant to censorship, and decentralized. If we called it something else and it was still doing those things, it would still be interesting to me. If we called it Bitcoin and it no longer did these things, then it would no longer be interesting to me. The interest does not come from any name or price. It comes because I think these characteristics that are kind of emergent properties from its design, its community, and its life cycle so far are what make it interesting. So if you say, here's another cryptocurrency, should I invest in this? What are the questions you need to ask? Well, I would start with RIPCORD. Then I would say, how does that fit into your portfolio? How are you balancing risk and reward? Every investment has some kind of risk inherent to it. That doesn't mean that I only invest in things that are this risky but not that risky. A balanced portfolio has a mix of different risk categories, which hopefully are decorrelated so that not all of the risky things blow up in your face at the same time, or that the nature of each risk is different. And furthermore, the percentages of each asset I might have will weigh the amount of risk that I'm willing to take in each asset class to give me a balanced portfolio that reflects my particular risk appetite. This is basic financial knowledge and investment knowledge. Now, the problem is that a traditional financial advisor will consider everything in crypto as too risky to invest in without even talking about percentages of portfolio allocation. That, in my opinion, is bad advice because risk has a purpose in a portfolio. It adds spice and gives you the opportunity for yield in markets that are otherwise very tightly correlated. And if that's what you want based on your risk appetite, then there's nothing wrong with exploring that to the right percentage. And again, what is your risk appetite versus somebody else's? I've often talked about risk as spice. Think of investing in crypto as cayenne in your stew. A pinch of cayenne will make your stew interesting. The entire pot of cayenne will make your stew inedible. And so, of course, you have to be careful and understand how much risk you're putting into your portfolio and what percentage of your portfolio has that risk. But that is not a criterion that you can apply across the board. Let me give you an example. I go to India to do a conference. I meet with my colleagues at a restaurant that they invited me to eat at just before, about an hour before, I'm going to get up on stage and deliver a talk. I'm starving, I haven't had anything to eat, I really want to eat. I ask them, is this restaurant spicy? They say, no, it's not spicy at all. Great, now let me ask that question again. For white boy over here, is this restaurant spicy? No, but we can order something mild. Okay, so we go in and I ask for the mildest thing they have. No spice whatsoever. Mild, no spice, you understand? I'm Greek. We think black pepper is spicy. No spice at all, minimum spice possible, because I know I'm in India. Oh my God, they brought me food that I could not swallow. 5 minutes after starting my meal, I have tears streaming down my face. My nose is running. My face has turned red. And I'm saying, this is too spicy, I can't eat it. And they taste it and they're like, this isn't spicy at all. Same thing applies to financial portfolios. Be careful don't ask someone else about what your tolerance for spicy should be. They may have a very different idea of what's spicy. All right, 2 or 3 more? Should we do 2 or 3 more? What do you think? Let's ask in the chat. Quick poll. If you want to do 2 or 3 more, give me a thumbs up emoji. If you've had enough, give me a clock emoji or a thumbs down emoji to say, that's it. I've got other things to do, sir. I don't have time to listen to you confuse me by mixing portfolio advice that you shouldn't be giving because you're not a financial advisor with Indian cooking techniques and spicy. I'm very confused. These analogies don't make any sense to me. And let's see what happens. Lots of thumbs up. This poll was rigged, people. It's 500 people, all of whom came here for a reason. They came here to learn. And so that was a rigged poll. This is what we call selection bias. Anonymous asks, I love the opportunities that crypto offers. However, I see the megacorps gobbling up BTC by the billion. And I wonder how much this adoption wave is widening the gap between rich and non-rich. Meet the new boss, same as the old boss. Thoughts? This is something that comes up a lot. Listen, Bitcoin is not going to change the fundamental aspects of human behavior. It's not going to change the emergent Pareto distributions of society. The rich will get richer in a society that is structured to allow the rich to get richer without limit. That's going to happen. And any society that has that structure is going to create a Pareto distribution, 80-20 rule, power law if you want, where a few people, like 5 people, control 40% of the wealth, and then everybody else is on the long, long tail, just above the poverty level. That's the natural outcome of society and human nature if you don't have mechanisms to change that. And many societies do. And whether those work or don't, they're better or worse, that's a political question. Has nothing to do with how a monetary system will deliver these things. However, what does have to do with the monetary system is 2 very important factors. 1, in most of the monetary systems, the rich not only have the ability to turn their wealth into more wealth, but they have preferential access to the wealth through something called the Cantillon effect, meaning that in an environment where the monetary system has very, very strong inflation through stimulus and monetary supply, that monetary supply is not helicopter dropped into the checking accounts of individuals. You know, for example, people in the US got a stimulus check. There was a pittance after a year of pandemic, while at the same time, the corporations aligned to the military, for example, were getting $800 billion in the budget and increases every year. Meanwhile, the fossil fuel industry is getting massive amounts of subsidies, and simply through inflation and stimulus, those who owned stocks in the US stock market saw their wealth rocket up, and some of them became the richest people this planet has ever seen, or at least the ones who we have their wealth listed. And so you see these phenomena. So that's the Cantillon effect. That's because stimulus and monetary supply injection and monetary inflation leads to asset bubbles. So those who have assets see those assets increase enormously. Now, some of that, of course, spills into crypto. The second effect, which is even worse than the Cantillon effect, is that wealthy people can then use their money to buy political power and change the rules to generate more money for themselves, which they use to buy political power, to change the rules to buy more wealth for themselves in an endless circle of corruption. So the secondary problem here is not that power generates wealth, but that wealth can buy political power. And that's something that doesn't happen with Bitcoin. So if you are Bitcoin rich, you cannot change the consensus rules. How do we know? They tried in 2017 and failed. So the Bitcoin rich tried to change the protocol rules. Some of the biggest companies in Bitcoin, some of the biggest personalities and investors in Bitcoin wanted to change the rules. Many of the miners wanted to change the rules. They were unable to do so. The whole thing got bogged down, leading to multiple forks, and the rules did not change. They just generated more forks. So the end result is that in Bitcoin, you can accumulate wealth, but you cannot use that wealth to change the rules of the game in your favor. You also don't accumulate wealth preferentially over everyone else. Everyone has the ability to enter into the system. There are no barriers. You don't have to be an accredited investor. You don't have to have a minimum investment. You don't have to be first in line at the Federal Reserve window in order to accumulate wealth, and the monetary policy doesn't benefit you directly. That's the big difference here. It's not that the wealth don't get wealthier. Of course, if you have money, you can buy money. But you can't change the rules, and you don't get a preferential position in line. The richest person who's buying Bitcoin is buying it at more or less the same rate that I am, with more or less the same access that I am, and everybody else is. Should we do this as the last question? Maybe one or two more. Okay, let's do the next one. I've already done that. Oh, here we go. Masterplank asks, what do you think of the services that allow you to earn interest with crypto? BlockFi, Celcius, etc. Are they reliable? I'm worried about the not my keys, not my coins issue with them. Yes, I would agree. Listen, obviously you're going to do whatever you want to do. And if what you want to do is earn 8% interest on some of these crypto assets, you're going to go ahead and do it whether I say so or not. One of the things you need to understand is the chase for yield is itself based on an inflationary assumption. What do I mean by that? If you have a monetary basis that is endlessly inflated, then if you just let your money sit, it isn't a good store of value. It will get eroded at between 2% and whatever the actual inflation rate is. 2% is the target in the US, but in fact it's much higher. 2% of whatever the inflation rate actually is will be lost in purchasing power every single year. In order to make your money remain valuable so that your savings don't get eroded over time, you need to generate yield with these savings that exceeds the inflation rate. So when someone says my portfolio is up 8%, that's in nominal terms, not in real terms, because your portfolio is 8% up in dollars, but if the purchasing power of the dollar is down 10%, then your portfolio actually is down 2%. Worse, you're going to get assessed taxes based on a gain of 8% that you didn't actually made, and those taxes are going to get assessed in dollars, etc., etc. So it's a trap. It really is a trap. With a non-inflationary asset like Bitcoin, which has experienced on average somewhere between 100 and 200% growth per year. Of course, some years it's down tremendously, other years it's up tremendously, but on average, if you average it out since 2009, it is a fantastic store of value. You don't need 8%. You don't need 6% in addition to the gains you already have just by holding. Now, you may need it for some other currencies that have inflationary aspects. So if you have a cryptocurrency that is inherently inflationary, then of course you need to lend it for yield. The risks of lending, in my opinion, far, far outweigh the risks of just letting it sit. Not your keys, not your coins is obviously a big one. One thing is that in any case with these, you have to give them access to your crypto. And then you are exposed to all of this counterparty risk. What if they get hacked? What if they get embezzled? What if they lose it? What if they seize it, freeze it, stop giving it back to you? Or what if in the process of moving your money to them or trying to move your money to them, you get phished, or you make a mistake, you enter your seed, whatever. Just recently someone told me that that's happened to them. It was tragic. It broke my heart. But this is something that happens fairly often. The more you touch your crypto, the more you move it, the more opportunities for something to go wrong. And if you're not sure about what you're doing, you keep getting exposed to risk through these activities. So for me, not worth it. For you, I don't know. I might consider doing things to earn yield in terms of some of the inflationary cryptocurrencies where I can stake them. So I would consider that. And I would consider that before I considered lending. And I do, in fact. I've staked a number of cryptocurrencies in the past, and then and that's one of the things I want to do. So yeah, maybe I should do a new t-shirt. Instead of not your keys, not your coins, I should have one that says something like, stop spreading your seed online. No, wait. Ew. Okay, maybe not. I gotta get someone else to write the slogans. That was disgusting. It really should have been stop spewing your seed. No, that's even worse. Next question. Skaffen asks, who owns the Lightning Network and should we be worried? Can you please include an explanation of what this network is and how it relates to Bitcoin? Thank you. Skaffen, that's a great question. There's a lot of confusion around the Lightning Network, which is primarily why I'm writing a book about it. And in fact, if you want, you can go read the first 5 chapters of that book, which are the ones that are finished. You can find them online at lnbook.info. The GitHub repository contains the book where you can read, also comment, review, and contribute if you want. We'd love that. So let's go through that question and answer it step by step. Who owns the Lightning Network and should we be worried? No one owns the Lightning Network. Any more than anyone owns the Bitcoin, the web, the internet, the email network, or anything like that. The Lightning Network is a protocol. And that protocol has an instantiated implementation, which is a public peer-to-peer network that is composed of some 15 to 20,000 Lightning nodes that are participating in the Lightning Network that are owned by, who knows, me, among other things. I mean, I own and run a few nodes. Some of those nodes are anonymous. You don't know who owns, I mean, the vast majority of them are anonymous. You don't know who owns them. And some of them run on top of the Tor Onion network, in which case you can't even find their address. They're on the Onion network. So let's see. So the individual nodes may be owned by individual people. Nobody owns the Lightning Network protocol itself. It is an open standard. In fact, it's a published open standard. You can find it if you look for the keywords Lightning RFC. RFC means request for comments, and bolts, B-O-L-T, which means basis of Lightning technology. The basis of Lightning technology specification, which is 12 bolts, are like Bitcoin improvement proposals. They are standards documents that describe what things a piece of software could do, should do, how it should operate in order to participate in the Lightning Network. So how to construct transactions, how to construct messages on the network, etc., etc. So anyone can write a Lightning Network client based on these specifications, and in fact, many people have. There are about half a dozen different Lightning Network clients written in half a dozen different programming languages, the most prominent of which are C Lightning, which has been written by some developers who collaborate with Blockstream. LND, the Lightning Network daemon, which has been written in Go by programmers who are employed by Lightning Labs, another little startup independent company, Eclair, and other wallets and clients from a company called Async, which is based in France. Those are kind of the best known ones. And there's, you know, another 3 or 4 in Rust, in various other languages that have been developed and continue to be developed. So nobody owns the Lightning Network. It's a protocol, it's an open standard, it's an open specification, it's open source software, it's royalty patent free, anyone can use it, anyone can write it, anyone can build it, anyone can own part of it, anyone can operate it. Should we be worried? No, it's great, it's open source software. No one controls the development of this protocol, and it's open for anyone to participate. What is it? It is a layer 2 technology. How does it relate to Bitcoin? The Lightning Network is Bitcoin. The Lightning Network is the exchange of signed Bitcoin transactions that allow you to establish very fast, secure, and private payments, even at very small amounts without incurring transaction fees on the blockchain. You do that by effectively running these things called payment channels, which are operated between Lightning nodes. And payment channels you can think of as a little side chain where you can take Bitcoin, put it on this little side chain, which is a payment channel, which effectively is just a multi-sig address, and then exchange tiny, tiny amounts, down to thousands of a Satoshi even, between your channel partner, and then link together many of these payment channels to route a payment across the network in a way where you don't have to trust anyone else on the network. You don't have to trust your channel partner. You don't have to trust the intermediaries. And the payments are routed in a way that is anonymous, private, very private, in fact, much more private than Bitcoin, fast and secure, that is trustless. You don't have to trust anyone, and that is atomic, meaning that the payment either goes through or it fails. And the intermediaries don't know where the payment originated or where it's going because it uses onion routing, and therefore can't selectively censor the payments of one party versus another. It's a fantastic development which allows us to maintain the fundamental security, robust, sound money, and decentralized nature of the Bitcoin protocol and blockchain, while at the same time achieve much faster payments. On average, a payment on the Lightning Network executes in 1 to 3 seconds, can be as low as 1 Satoshi, which I do all of the time on the Lightning Network. In fact, you can go on my shop and buy a $2 book on Lightning for fees that are 1/10 of a penny, and that will be delivered from your Lightning wallet to my shop in 1 to 3 seconds without a Bitcoin on-chain transaction. So that's what the Lightning Network is. It's an enhancement to Bitcoin. It is Bitcoin. What you're using is Bitcoin. The currency units are Bitcoin. They're not IOUs. They're not a different currency. All of that you hear is deliberately spread misinformation and lies by people who have a very specific agenda and don't really understand the technology. And if you want to understand it, read my book. Is that a good question to end it on? Or should we do one more? All right, we're going to do a speed round, and then we're going to end today's live stream. In the speed round, I'm going to answer questions with yes, no, or maybe. Please bear with me because my producers will have to queue up questions really, really quickly, and it takes 3 or 4 seconds before the question actually pops up. And let's go. Are fees the only mechanism to prioritize transactions, prevent spam, or can a system exist that uses another mechanism to prioritize transactions and prevents spam, similar to what several feeless cryptocurrency systems seek to do? Yes, fees are the only free market mechanism that can prevent spam, in my opinion. What is the chance that Bitcoin will be delegalized in the Western world? Say it simple, please, because I'm not the smartest guy in the room. 10%. Since Lightning Network nodes need to be online to guard against channel balance hijacking by the other party, what would be a safe availability? 99.9%, 80% of a node. Will it ever be possible to run a Lightning Network node fully from a mobile device? 90% availability is enough. You can enforce a penalty transaction within the 2-week time frame before it executes. So 90% would be enough, and yes, you can run it on a mobile device already. Will you throw a big party if and when Taproot goes online? Yes, I will throw a party. Maybe we'll do a VR party with Operator Burst Up as our DJ, as we've done before. It's going to be fun. We do those on Patreon every now and then. Would it be possible to make coin joins look like a single transaction using the property of signature aggregation of Schnorr signatures? Asks Giovanni. No, not really. Coinjoin and Taproot are not really aligned in that way. Coinjoin uses multiple inputs. Taproot does other things. It has other privacy enhancing benefits, but not directly related to Coinjoin transactions. What would have to happen for you to think Bitcoin is inevitable? I would have to lose my critical thinking skills because I don't think anything in life is inevitable. And I would never make absolute statements like that. I am not clairvoyant. Nor do I believe clairvoyance exists. Thoughts on staking ETH for ETH2? Does it make sense to stake for the new ETH2? Maybe it makes sense to you. It makes sense to me. I have already staked some. But that's because I want to evaluate the technology. Your mileage may vary. Is Litecoin kind of a testnet for Bitcoin? It has been in the past. For example, Litecoin activated SegWit before Bitcoin, and that was a nice, wonderful testnet. And it's currently experimenting with Mimblewimble. Certainly, Litecoin does give us a production testnet that actually has value on it for Bitcoin. It has worked like that in the past, yes. How are Bitcoin transfer fees calculated? What is input and output? Transaction fees are calculated based on the size of the transaction in bytes. In a competitive auction against other people who are bidding for a specific fee per byte. The actual transaction fee is the difference between the amount you're spending, which is the inputs of a transaction, what you're consuming of your available balance, and the amount you're paying someone, which is the outputs in the transaction, the payment, and the difference, the leftovers, the keep the change part of the transaction, is the transaction fee. In order to understand inputs and outputs, you're going to need to read Chapter 6, Transactions of Mastering Bitcoin, which you can find online at bitcoinbook.info. That was not a yes-no question. Why are the media coming down on the Bitcoin eco-disaster FUD so hard? They've started prioritizing it over other FUDs, such as fees and transaction speed. I think primarily because the very same audience that is interested in the internet and monetary experimentation and have been screwed over by the banking system so hard and are open to exploring alternative monetary systems, alternative open private cryptocurrencies like Bitcoin, are very sensitive to ecological issues because they've also been screwed by climate change and the impending disaster that they're going to inherit from the previous generation. So it works with that audience. And I've noticed that a lot of, and I'm not talking millennials. Millennials are people in their mid-30s and mid-40s. I'm talking more the Gen Z that follows and generation after them. So it works. That's why they're using this type of FUD. I would like to time lock my hardware wallet for a year. Is that easy for me to do? No, Brian, it is not easy. It is also dangerous. I would not do it. Put it in a safe deposit box that's a flight away from you so that you don't undergo the temptation of selling. How many Bitcoin are in one block? Currently, the reward is 6.25 Bitcoin until block 830,000 when we have our next halving event, and 6.25 Bitcoin as a reward, plus whatever transaction fees are collected from the transactions. How would I pay anyone in Bitcoin when I can? Why would I pay anyone in Bitcoin when I can invest it? That's a good question, Steph. The reason you would is because you cannot use any other currency because of currency controls, cross-border transaction, problems, fees, and delays, or because that's the only currency that they will accept. And that's why I do my payroll in Bitcoin for many of my contractors and employees. But you're right. Most people will spend their dollars before they spend their Bitcoin for good reasons, because of Gresham's law. That's the lightning round done, and we even answered some lightning questions about the Lightning Network. Now, thank you so much for coming to today's April live stream Q&A. Don't forget to subscribe, hit the little bell icon to turn on notifications so that you know when we're doing videos. We're going to be doing videos that are not scheduled, so it's even more important now that you subscribe and turn on notification than it was before. Thank you so much for attending. If you enjoyed this video, please like and add to the comments, or even share it with someone else. And I hope to see you again soon. Have a wonderful weekend, everyone. Bye-bye. Hi, I'm Andreas Antonopoulos. If you enjoyed that video, consider that it takes a lot of work to produce open and free content that can be shared with everyone around the world. This isn't sponsored by some company. It's not promoting a product or an altcoin or some kind of investment scheme. My goal is simply to help explain the technology of Bitcoin and open blockchains to as many people as possible in a neutral way that focuses really on the incredible possibilities that this technology brings us. If you'd like to support that mission, subscribe to my channel and go on patreon.com/aantonop, where you can participate and help me build better content for more people. Thank you.